Hello and good morning, everyone. So, today is the last trading session of this week. So, let's get started with today's top stocks and news. The first one is Hero MotoCorp, where the company's net profit is up by 15.7% at 1,393 crores. Revenue is also up by 16%. Operational numbers are also robust this quarter, and margins are reported at 15% versus 14.5%. Basically, the results are supported by the volume growth of 16.91 lakh units sold of motorcycle and scooter in quarter 2. Along with that, if you look at the entire first half of fiscal year 26, the company reported the highest ever revenue and PAT as well. Now, if you look at the overall market share, there is a market gain which was particularly driven by HF Deluxe Pro in the entry segment and by Passion. So the numbers are good for Hero MotoCorp. The next stock which you need to look at is a PG Electroplast, where the company's net profit is reported at 3 crores, which is down by 86% on quarterly basis. Now, if you look at the top line of the company, it is also marginally reduced, reported at 655 crores. EBITDA is down by 46%, and if you look at the margin profile, it is reported at 4.6% versus 8%. Now, the major key points which we need to note down in PG Electroplast: first, there is a fiscal year 26 sales guidance of 5,700 to 5,800 crores, which is up by 17 to 19% over fiscal year 25. Now, if you look at the fiscal year 26 net profit guidance, it is around 300 to 310 crores, up by 3 to 7% over fiscal year 25. Now, we have seen the sluggish result in quarter 2, basically driven by AC business, because there is a decline of 45% on yearly basis, and if you look at the washing machine segment, there is a growth of 55%. So clearly, AC business is the culprit over here. The key challenges was weak AC room demand. Along with that, there is a early monsoon GST cut expectation as well. The next stock is Bharat Dynamics, where the company's net profit is reported at 216 crores, which is up by 75.5%. Revenue is again almost double this quarter, reported at 1,147 crores as compared to 545 crores last year same quarter. EBITDA is up by 89%, and margins are reported at 16.4% versus 18.1%. Along with that, company signs 2,095 crore contract with Ministry of Defence for Invar anti-tank missile to enhance lethality of T-90 tank. The next stock is Jubilant Foodwork. The numbers are good in this quarter. The net profit of the company is reported at 186 crores. Revenue is again up by 20%. Operational numbers on the same side is also improved this quarter. The support is coming from the same-store sale growth. We have seen approximately 14.8% LFL growth. The Domino India revenue is also up by 15.5% on yearly basis. Along with that, if you look at the Domino delivery channel revenue, it is up by 21.6%. Basically, there is a strong delivery channel revenue growth led by the robust order growth of 23.7% on yearly basis. Now, if you look at the dining segment, there is a flattish revenue reported this quarter. So clearly, the growth is coming from the Domino delivery channel. Next stock which you need to look at is GMR Airport, where the company's net loss is reported at 37 crores versus the loss of 280 crores. The revenue is reported at 3,670 crores versus 2,495 crores. EBITDA is reported at 1,500 crores versus 962 crores, and margins are also improved this quarter, reported at 41.72%. The next stock is Muthoot Finance, where the company's net profit is reported at 2,345 crores. Net interest income is reported at 3,992 crores. Net profit is basically up by 87%, and net interest income of the company is up by 58.5%. Along with that, company's board approved fundraising of up to 350 billion rupees via debentures, and along with that, there is a 5 billion rupee infusion in Muthoot Money. The next stock is NSDL. We have seen a good numbers in this quarter. Net profit is up by 14.6%, reported at 110 crores. Revenue is again up by 12.1%, and it is reported at around 400 crores this quarter. If you look at the operating numbers of the company, it is also reported on a positive side. EBITDA is up by 13%, and margins are reported at 32% versus 31.7%. So basically there is a slightly uptick in margin profile. The next stock is Apollo Tyres. Net profit of the companies declined by 13%. Now, if you look at the top line of the company, it is marginally increased by 6%, reported at 6,831 crores. EBITDA is again up by 16% this quarter, and margins are reported at 14.9% versus 13.6% on yearly basis. The next stock which you need to look at is LG Electronic, where the company's net profit is down by 27%. Revenue is up by 1%, EBITDA is again down by 28%, and margins are reported at 8.9% versus 12.4%. So clearly there is a 400 basis point decline in margin profile of the company. Now, the next stock which you need to look at in today's trading session, basically not only particular stock but the entire chemical, plastic and textile sector you need to keep on your radar, because government withdraw 14 best quality control order with immediate effect covering key chemicals, polymers and fiber based material. Now, the government is saying that quality control order withdrawal are relief to all these industry like chemical, plastic and textile sector. It cover polymer and the fiber intermediates, and along with that it cover the major plastics such as polypropylene, polyethylene, PVC, ABS and polycarbonate as well. The next stock which you need to look at is Zydus Life Science, because company received final approval from US FDA for diroximel furoate delayed release capsule 231 mg. Along with that, the next update on Zydus Life Science is that US FDA closes inspection at Zydus Oncology injectable manufacturing facility in Ahmedabad. The next stock is NBCC, because company gets order worth 340 crores from construction of Central University of Kashmir. The next stock is CESC, because ARM get approval from Odisha government to set up manufacturing of solar cell. The total investment is at around 4,500 crores. So these were some of the stock which you need to look at in today's trading session. Thank you. Bye-bye.